And piggybacking off that, just talking about current events today, the DXY is hitting 20-year highs. So yes, long-term all fiat currencies die, but how do you see the next, decade going if we're hitting all-time highs against other fiat today?
Here's another weird thing about money too, is we think that you hear this term hyperinflation, and you think, oh, they just print money and then it linearly depreciates and the money eventually goes to zero and that's hyperinflation. Like there's some kind of smooth curve from hard money to soft money, right? But it's nothing like that at all. It's actually quite the opposite. It's extremely volatile. And the reason is, and I'll offer you another definition of money now, is that money is an insurance policy on uncertainty, right? If you are facing conditions where you don't know what is going to happen, then the best strategy for going into that situation is to have as many options as possible because you don't know which way the world's going to move. So you want as many options as you can have. So as we said earlier, if money is this perfect technology, this technology of pure optionality, then holding money is increasingly the wise strategy as things get more uncertain. So the more uncertainty there is in the world, the higher the incentive there is to hold or save money. So when it comes to fiat, you get this weird situation. You mentioned the DXY, which is the dollar index. Things are very uncertain right now, getting more uncertain by the day. If you've paid any attention at all, there's a war in Ukraine, global technocratic utopian World Economic Forum psychopaths trying to pump all kinds of stuff into all kinds of people. You've got energy crisis in Europe. You've got all these geopolitical breakdowns, right? Uncertainty is ramping up quickly. And if you don't know that, I guess you've been living under a rock. Well, what's the optimal strategic response to that? It's, well, I need to hoard money. I need to save money. I need to accumulate as many options for myself as possible going into these conditions. So how does that translate into purchasing power of fiat currency, specifically for the dollar? It's that the value of the dollar is going up, right? There's more reservation demand to hold dollars and not spend them, not buy stuff, not trade them away. However, that provides some kind of a false confidence in a way. Typically, central bankers will see that and be like, oh, well, we printed money. Here's the perverse thing about it. You're printing money, so you're increasing uncertainty in the world, right? You don't know how many dollars in circulation, you're distorting price signals, you're misleading entrepreneurial activity, so you're driving um, entrepreneurs to overborrow to start projects they cannot finish. And then when these projects ultimately wash out and fail, if enough of them fail simultaneously, that's what we call a recession. That's what we're going into right now, right? So the printing of fiat currency increases uncertainty in the world, yet the holding of money is the insurance policy on uncertainty in the world. So you get this really confused situation where people are hoarding money as uncertainty rises, but then eventually there are shocks, right? Where people need to get food, people need to get shelter, they have to consume. And a lot of that money gets dumped back out into the market. And then you'll see the purchasing power swing the other way. So the punchline here would be that printing of money is increasing uncertainty. And then that increased uncertainty gets expressed in higher volatility of the purchasing power of fiat currency over time. So the case study for this is go and study the hyperinflation of the Weimar Republic. And this is in the 20s and 30s, I think, 1920s and 30s. I might be a little bit off on the years, but just Weimar Republic, Weimar Republic in Germany. Look at the price of gold during the Weimar hyperinflation. It would go up 5, 10x, and it would draw down 80, 90%. And it would do that repeatedly. And the amplitude of the waves would get bigger each time. So it's not like they just printed a bunch of marks and the mark price of gold went from 1 to 10,000. It was super volatile up and down the entire time. So I think we're going to be going through similar circumstances today, and you'll see this expressed in the price of gold and the price of Bitcoin as these fiat currencies collapse worldwide.
Yes, great perspective. To watch the full conversation, there's a link down below in the video description. And if you're interested in learning more about cryptocurrency, click subscribe right now. We drop a video every single day. You do not want to miss one. See you tomorrow.